All dear students, I am here with you another video on ratio analysis. Uh, till now we have discussed profitability ratios, liquidity ratios and activity ratios. Our next thing is capital structure ratios or leverage ratios. That is nothing but the relationship between our total funds employed in the organization, that is long term and short term, as well as own sources and from outsourced resources, that is own capital and borrowed capital. So here we are having capital structure ratio sum, and these ratios are very important. So let us discuss one by one. First one, debt equity ratio, that is debt equity ratio is equals to long term debt or total debt. Long term debt means long term liabilities, total debt means long term liabilities plus short term liabilities, okay, other than the shareholders fund. So long term debt divided by shareholders fund or total debt divided by net worth. You can call it as shareholders fund or net worth or proprietary funds, all are one and the same. See here, long term debt divided by shareholders fund or total debt divided by net worth. Ideal ratio is 2 is to 1. Suppose owners funds are rupees 1, outsourced funds should be 2 rupees, not more than that. That is the ideal ratio. And LTD means long term debt, TD means total debt, that is long term and short term. Shareholders fund, shareholders fund are net worth or proprietary funds is equals to share capital, equity plus preference plus reserves and surplus plus profit minus fictitious assets. If you remember the company format balance sheet, under that we will be having shareholders fund. Shareholders funds includes share capital, reserves and surplus. From that you just deduct the fictitious asset, that is what here. So usage, to know the soundness of long term financial position of the company, normal standard is, that is 2 is to 1. A higher debt डेट इक्विटी रेशियो में इंडिकेट रिस्क, ज़्यादा डेट इक्विटी रेशियो 2:1 से ज़्यादा नहीं रहना. इफ इट इज़ मोर देन यू आर इन रिस्की पोजीशन. आवर नेक्स्ट रेशियो इज प्रोप्राइटरी रेशियो. Shareholders funds are proprietary funds divided by total assets or net fixed assets. Okay, generally we take with the basis of total assets. So shareholders fund, as I said previously, that is itself shareholders fund will be total assets, means all assets excluding fictitious assets. Fixed assets, net fixed assets is equals to gross fixed assets minus depreciation. And ideal ratio is 1:3 to indicate what extent shareholders have been invested in total assets. Shareholders अपने पैसे fixed assets में, total assets में कैसे invest करें, that will be tell in this ratio. Our next ratio is debt ratio or solvency ratio, that is total liabilities by total assets, it should be 2:3, that is 2 by 3. Hundred minus proprietary ratio should be your SR. To find out the what extent total liabilities have been invested in total assets, if this ratio is too high, company's solvency is not satisfactory. ये ratio कम रहना वही अच्छा है. Our next ratio is capital gearing ratio. We call it as capital gearing ratio. FIBS, that is fixed interest bearing securities. Fixed interest bearing securities divided by equity share capital. Okay. Or equity shareholders funds we need to take. That is fixed interest bearing securities, that is debentures, long term loans, preference share capital, on what we will pay interest. Okay, those securities. Sometimes we include preference dividend also in this. Equity shareholders fund is equals to equity share capital, reserves and surplus, and see fixed interest bearing securities, equity shareholders fund, equity share capital, reserves and surplus plus profits minus fictitious assets. Fixed interest bearing securities includes debentures, long term loans, and preference share capital. But we need to take interest. This is coverage ratio. Here we need to take debentures, long term loans, and preference share capital divided by the equity share capital. To express relationship between fixed interest bearing securities and equity shareholders fund. So next ratio is fixed assets to long term funds. Net fixed assets divided by long term funds. This ratio should be less than 1. Fixed assets is equals to gross fixed assets. Net fixed assets is equals to gross fixed assets minus depreciation. If depreciation is not given in the question, we will take gross fixed assets itself as net fixed assets. And long term funds is equals to shareholders fund plus long term liabilities. Use and interpretation relating to it is to know the proportion of long term funds invested in fixed assets. जो लॉन्ग टर्म फंड्स लाए अपने बोरो करे लोन्स, वो फिक्स्ड एसेट में कैसे इन्वेस्ट करे वो रेशियो बताएगा. The ratio should not be more than 1. 1 से ज़्यादा नहीं रहना है. Means entire long term funds should not be invested in fixed assets. Next ratio is interest coverage ratio. Interest coverage ratio, that is EBIT divided by interest. EBIT means earnings before interest and tax divided by interest on long term loans we need to take. This should be 6 times, that is our profit should be 6 times of our interest payment. Suppose you are having 60,000, your interest should be 10,000 itself. So 60,000 divided by 10, 6. So our whatever interest we are paying, 6 times more profit we should earn. That is the concept. To measure the long term debt service capacity of the firm, and the normal standard is 6 times. The higher this is better. Next interest coverage ratio or debt service coverage ratio. Next one is our dividend coverage ratio. There are two types of dividend coverage ratios. One is preference dividend coverage ratio, another one equity dividend coverage ratio. So earnings after interest and tax we need to take divided by preference dividend. Earnings after interest and tax, preference dividend, dividend paid on preferences. And similarly for equity dividend coverage ratio, EAIT minus preference dividend. From earnings after interest and tax we need to deduct preference dividend, then we will get earnings available to equity shareholders, that divided by equity dividend. It will be in number of times. What is the use? To know the number of times the dividend are covered by the net profits, the higher dividend coverage ratio is better for the shareholders. This is what our dividend coverage ratios. Next, lastly, we are having one more thing. After let me give a brief explanation of capital structure ratios. Debt equity ratio, that is the name itself saying debt equity, means what is the ratio between debt and equity. Debt means liabilities, so that will be in numerator. Long term debts or total debts in the numerator. In the denominator we are having shareholders fund. Debt equity ratio. Next, proprietary ratio. Proprietary funds or shareholders funds are nothing but same. So proprietary funds divided by total assets we need to take in the denominator, and 1 by 3 is the ideal one. Next one is debt ratio or solvency ratio, that is total liabilities divided by total assets. Debt means liabilities, so total liabilities in numerator. Next one, capital gearing ratios. Capital gearing ratio, that is nothing but out of capital how much we can how much leverage we can give. Gear means जैसे बाइक को gears रहते, one gear, second gear, first gear, like similarly out of our capital, how much leverage we can give for the outsourced funds, how much we can borrow from the outside sources. That is the ratio here we are having, that is fixed interest bearing securities, that is debentures, long term loans, preference share capital divided by equity share capital. ఆమా చేసిన నువ్వు కనెక్ట్ చేసుకోవాలి. నెక్స్ట్ fixed assets to long term funds ratio. So net fixed assets divided by long term funds. Interest coverage ratio, EBIT by interest. Dividend coverage ratio, EAIT divided by preference dividend. Equity dividend coverage ratio, earnings after interest and tax minus preference dividend divided by equity dividend. These are the various capital structure ratios. Let us see one more thing. This is the last ratios we are having. First one is EPS, earning per share. Earning per share. Just now we have discussed earnings after interest and tax to equity shareholders. How you will get equity shareholders के लिए earnings कितना है, that is earnings after interest and tax minus preference dividend divided by number of equity shares. This is the formula which you have already used in your accounts, that is what we call in valuation of shares. There was one formula under net assets method, earnings available to equity shareholders divided by number of equity shares. Same thing we use here. Its interpretation to measure the profit to equity shareholders on per share basis. एक एक शेयर के लिए कितना प्रॉफिट आ रहा. Higher EPS is the better for the shareholders. Next, PE ratio or profit earning ratio we call. MPS divided by EPS. MPS is nothing but market price per share, that will be given in the question. EPS we have just calculated from the above formula. So it shows the relationship between market price per share and equity earning per share. So establishes a relationship between MPS and EPS. A higher PE ratio reflects higher earning potential and अगर ये कम रहा तो वो कम potentiality बता रहा. Next one is DPR, dividend payout ratio. This one DPS divided by EPS, dividend per share divided by earning per share. Okay, dividend per share divided by earning per share to indicate the extent of net profits distributed as dividends to shareholders. कितना profits आप equity shareholder को dividend के जैसे पे कर सकते, ये DPS बताएगा, dividend per share, dividend payout ratio. Next, dividend yield ratio. Dividend yield ratio is nothing but DPS divided by MPS into 100. So it shows the relationship between dividend with the market price per share. ये higher dividend yield may not always preferable by the shareholders. वो ज़्यादा नहीं रहा तो ये अच्छा है. These are the various ratios. If you learn the ratios formulas, that will be very good for you, so that you can easily do the problems. if you remember the formulas, we can complete the problems easily. And I request you all to remember the formulas. You can by head also, mug up whatever may be thing, because we don't have any other option, because exams are very near. And take out your textbooks and see some illustrations so that you can understand what we have done. And it is just formula interpretation itself. formula आया तो problem कर सकते. So one more thing, stay home and be safe. If ज़्यादा हो जा रहा क्या, no problem. Stay home and be safe. Some people still are going out. I request you all and them also to not to go outside unnecessarily. It may be you or your brother or your elders or your parents, your father. If it is any emergency necessity, then only you go, otherwise don't go. Because trend has changed, number of positive cases are increasing, so it is better to be at home and safe. mm, that's what we can do, nothing more than that. So I request you all, if you all are uh, at home itself, you are not going unnecessarily, thank you for that. Say thanks to your parents and others also who are not going outside. Lastly, but very important thing, सीखना बंद तो जीतना बंद, सीखते रहो जीतने के लिए. टेक केयर. जय हिंद.